Hi everyone, I'm Ken from CryptoTradingKS. If you're new, welcome, and welcome back KS family. Let's run the numbers. Bitcoin currently down 0.64% to 4251. Ethereum down 0.25% to 3034. From my 30 years in financial markets, I explain the smart money mindset to assist you to be more of a financial blessing to yourself and those you love, gaining real wealth in the process. If you would like daily updates on price movements in the crypto market, 7 days a week, 365 days a year, please subscribe to YouTube. I'd just like to let you know that I've got links in the description of this video, and you can always reach out and directly message me on Twitter as well. Happy Easter, everyone. I'd like to thank all of our community, so many beautiful people and so many incredible well-wishers across Easter. It's just wonderful to see community come together. At the same time, there's quite a few people that are going through life pullbacks. I just want to let you know that our love and healing thoughts are with you. You're not alone. I'd like to share a bit of a graphic that I put together to explain the differences between retail thinking and smart money thinking. Retail thinking in the crypto market is about 95% of people. A little bit more than that. Smart money is therefore under 5%. There's an incredibly different way that smart money approaches the market. For one thing, smart money is professional. They are not emotional. Smart money exists in Zone 3 and Zone 4, and they focus on positive excellence. One thing that you can always see with smart money, I can always tell who's going to be smart money just by the way that they talk. They put in the hard work. They don't rely on others. They do the research, and they do not get angry. This is really, really important. Anger and blame just stop people from learning. It's very, very expensive to get angry. Unfortunately, a lot of people don't realize this because they're caught up in the emotion of the market. When we look at retail thinking, which is the vast majority of the crypto market, what we see is it's emotional. People talk about hope. Things are turning green. Then they get optimism. Wow, it's going greener and greener. And then they get thrilled. Wow, they can't lose. And then they go into euphoria. Wow, fantastic. And then the price drops. And then they get anxiety. And they get a little bit worried. And then they get denial and start lashing out. And then they have panic as prices come down further. Eventually, they end up pretty much selling at the exact bottom. And then the cycle just continues around here. So why does this happen? Everybody knows about this hope, optimism, thrill, euphoria concept, but why does it play out all the time? It's because people like emotion. If you think about gambling, people love gambling. People love the concept of luck. They also like the competition concept and comparison. For example, if you look at the retail influencers, they're the ones driving Lamborghinis and showing off their cars. They're making you compare yourself to them. What has their car got to do with you? This actually sets people up to want to compete with each other, and it's really exciting to go through this hope, optimism, thrill, euphoria. You can't do anything wrong, everything's going so well, and then the bottom drops out. Many people approach the market like a casino. They think they can get rich quickly, and they absolutely go for very cheap prices. The cheaper the better. They want millions and millions of units of crypto. They don't want a fraction of a crypto. What's actually happening there is they're getting into very, very large risk. A lot of people go off large exchanges. The largest crypto exchange in the world is Binance, and Binance doesn't register, it doesn't trade a lot of cryptos. Why is that? They're literally not safe. A lot of cryptos out there are unsafe. For example, out of the 18,921 cryptos, that's a lot of cryptos. A lot of them are rug pulls. A lot of them are scams. And a lot of people look at these big percentage gains and say, I've got to get in there. It's only going to go up. I'll go all in and more. Unfortunately, that is not the way to become rich. You don't become rich. You don't become wealthy in that direction. Wealth is all hard work. It's not a thing that you can just sit back and say, let the roast duck fly into my mouth. Well, so Confucius said. He said that the man who waits for the rose duck to fly into his mouth must wait a very, very long time. If you feel that you're feeling these emotions, if you're getting into internal conflict or external conflict, that is a really good sign that you're in zone 1 and zone 2. But don't worry about that. Everybody who starts goes to zone 1 and then to zone 2. It's a natural progression. Zone 3 and Zone 4 are the smart money zones, and less than 5% of people are there. We are professional in Zone 3 and Zone 4, and everything I focus on is getting you in and keeping you in Zone 3 and Zone 4. One very, very important thing to understand, Zone 3 and Zone 4 are strong people. They've got strong boundaries, but they don't get angry. If you find you're getting angry at other people, that's just a form of blame. Now the problem is, blame stops learning, and learning is the foundation of Zone 3 and Zone 4. Professionals are unemotional. They have the knowledge. They've put in the hard work and dedication. They have patience. They've got a lot of rules which they actually understand the market by. And it's not like getting a shopping list of rules. If you do not understand the rules, you'll never know how to apply them. They apply scientific process to what they're doing. They just don't put their finger up in the wind and say, which direction is the wind blowing? They use a specific scientific methodology. They look for correlations. They look for how things relate to each other outside the crypto market and inside the crypto market. They've got a specific method for marking up the charts. They've got concepts, ideas like the 10% per week, the 10-5-10 fund, BORSOG, buying on red, selling on green. And the most important thing, they are in control. If you find yourself getting angry, out of control at any stage, it's keeping you away from Zone 3 and Zone 4. You need to be cool. I see in the mainstream media all the time this analysis of Bitcoin. It makes my skin cringe, if skin can cringe, when I see this, because it's an exponential price action. It must be put on log. And a lot of people don't understand the exponential nature of crypto. They also look at this particular part of price action and say, oh, that's just what Bitcoin does. Bitcoin sells off like this. This was when the world closed down. What has actually happened recently? We've had a number of black swans. Just one after the other. China, India, Russia. Oh my goodness. It's been a horrific time. And just look at how brilliantly Bitcoin has been holding up. The entire crypto market has held up exceptionally well. We are not in a bear market. Bear markets look like this, right here. This is not the structure of a bear market. There's also another thing in here. Retail does not know how to trade. Smart money bases their knowledge on trading. All investors become traders anytime they buy or sell. That is what smart money knows. So they focus actually on entering and exiting. When you see a chart like this explained on any form of media, it means that person does not know how to trade crypto. They may know how to trade the stock market. Absolutely, that is possible. But the problem is the crypto market is incredibly different. It's an exponential market. All of it is exponential. Some of the stock market is exponential, but it's a very small minority. When you look at the crypto market, every single thing in crypto is exponential. People get caught in retail thinking because they don't know when to buy or when to sell. And buying actually makes you your profits. Believe it or not, that is the most important thing that you can do. And of course, you need to know how to sell. I can't say this enough. Rule 303 is incredibly important. Positive excellence is built on the concept that you earn whatever you want to keep. If you don't want to keep it, you can just relax and take your time and just lay on the couch and not do too much, but you won't keep it. When you earn it, you keep it. Maintaining a positive excellence life trend is what crypto technical analysts do. If people get into fighting and arguing, they do not have inner peace or outer peace. We can tell that people in a constant state of conflict are very, very unhappy with themselves. The problem with that, if you are unhappy with yourself, self-sabotage and self-doubt will actually result in you earning much, much less from the market and having a much more volatile time. That's why we focus on positive excellence. Emotions are really important to master. Always remember, life resets daily. It doesn't matter what happened yesterday. It doesn't matter if you messed everything up yesterday. Today is a new day. It's a reset. It's literally a new life. And at a time like Easter, that's really important to think about too. Crypto technical analysts do the hard work. They do first year, which is the foundations. They do second year. They don't take a year to do, but I'm just giving you a parallel. Second year is the outside trends. Third year is timing. Fourth year is real wealth. And fifth year is the trigger section. Now, when I'm saying this, it doesn't take 5 years. It takes about a month to become a crypto technical analyst. But the key is they're like different years at university. If I was to pull, for example, timing back into foundations, I would destroy people's foundations. They're simply not ready for it. You must do one thing at a time and not jump all over the place. This is incredibly important. It's kind of like if you're in year 8, and this is year 9, year 10, year 11, year 12. You can't learn year 12 in year 8. It just doesn't work. You're just not ready for it. When you look at the crypto market, it's important to understand the dynamics that exist under the crypto market. When we look at crypto fear and greed, high levels of fear are exactly when smart money steps in. They understand the price is always moving in a wave. Price moves in waves is rule 4, and a very, very vital rule to understand. Price is always going up and down all the time. Professionals know this and they don't get emotional. They're waiting for fear to increase to very high levels in the market to lean in. This is what professionals do. They BORSOG, they buy on red, and they actually accumulate losses on the way down. This is unlike what retail does. Retail does exactly the opposite. It buys on green, sells on red, buys on green, sells on red, buys on green, sells on red. You can see you could get easily caught at the wrong cycle and basically blow up your account just in time. What we do as professionals is that we lean in when things are really looking bad. And I guess that's what professionals do. We're like firefighters. When everybody's coming out of the fiery building, we're running in because we've got the gear, we got the equipment, we know what we're doing. We can also see aggregated open interest starting to bottom out. It's hitting several levels of support. There's a very good correlation between Bitcoin's price action and open interest. And this is really important because it gives us another clue as to what the crypto market is doing. Now, why are we looking at Bitcoin? Why don't we go to that 1,000 to 1 odds, number 19,000 in the crypto list, and just look at that? It's because of Rule 45. No alt can escape Bitcoin's gravity. Bitcoin has a gravity, and the entire crypto market will be pulled in either direction because of that gravity. It's one of the most important things you can understand if you wish to become smart money. When we look at Bitcoin's price action, we see that the current price is 40,283. This is a really good spot for price to be in. Now, does it mean it won't come down lower? It's just been consolidating for pretty much the past day. We can see that it didn't make its way down to B. Now, why is that? Because we've got a lot of support on these lines. Now, what does that actually mean? We have a lot of support at 39,084. Does that mean the price cannot come down into B? Of course, there are no certainties in the crypto market, and only Zone 1 and Zone 2 deal with certainty because they're holding on. They don't know when to exit, so they get freaked out if price comes down. Professionals do exactly the opposite. They look at price coming down and they say, whoa, what a fantastic buying opportunity, to get the percentage to move in their favor. So you say, Ken, what's that white line there? That's the NASDAQ 100. What we actually see when markets sell off, they all come into alignment. This is a very powerful tool for us to use. We say that Bitcoin cannot escape the stock market's gravity, and we can see the directional correlation between the NASDAQ 100 and Bitcoin is really, really strong. What we actually do with this is that we're trying to predict how things will move. And you might say, Ken, what happened? You know, the white line, it stopped there. It's not keeping moving. What's that about? That's about the fact that the stock markets don't trade on weekends, and they have very confined limitations to when they trade. Bitcoin and crypto trades 24 hours a day. It's just an awesome market. Also, the other thing to note, the main markets, the stock markets, do not trade on public holidays. That's another bummer when it comes to the stock market. It's so slow, it's so non-exponential, so you can't take advantage of the inherent volatility. And what do we see here? What are these red lines? That's the number of shorts. They're starting to pick up. What's this green line? That's the longs. What does this actually reflect? What it reflects are the longs are coming back into the market. What does that mean? It means that people are going long. They're buying at a price and expecting prices to go up. And look at that particular uptake there. It's a very rapid ascent. What about the shorts? Oh, they're not quite sure. They're getting a bit wobbly. They think the market will come down, but they're not really committed. You get real commitment on times like this, but even that commitment doesn't mean the market is coming down. It could just get choppy. So something to bear in mind. When it comes to longs and shorts, it's good to see how much liquidation is in the market. Longs and shorts both use leverage trading. That means that they borrow. If you borrow, you pay servicing costs. So if you've bought something and you keep on paying for it, you're not buying at spot. Buying at spot means that you have it, you can own it. You can push it to cold storage and just keep it in your basement for the next 20 years and it will be fine when you decide to put it back onto an exchange, for example. But leverage is not like that. You must pay all the time. We recommend that friends don't let friends leverage trade until they absolutely know what they're doing, and even then it's really not advisable with crypto. Unfortunately, that's crypto, but in the stock market you need leverage because things just move so slowly. Just think about foreign exchange. They look at pips and they have to trade by pips because it just moves so microscopically. It is not an exponential market, and they need leverage inside the stock market for exactly the same reason. But when it's crypto, it's a completely different animal. It's a wild animal. What we're seeing here is about $60 million worth of liquidations across around 17,000 positions. When we look to the past 24 hours, looking at total liquidations, we can see about 53% are short. That means that the price is coming up because the shorts, when they get liquidated, they have to buy, which pushes price up. But look at this, it's absolutely tiny today. And that is public holiday trading, and public holidays combined with long weekends. Wow, not many people inside the market. But we can see the futures open interest, it's increasing, and we can see it's above resistance and making its way up. This is really good stuff. This means the crypto market is really healthy. And what we look at is the size of liquidations is so small. It's almost insignificant what happens, even if price gets pushed around, and that can happen on low volume days. Why is that? Low volume days means there's not many buyers and not many sellers in the market, and you can see that with the liquidation data that I just showed before. And what does that mean? It means that if somebody offers to sell something or to buy something, they can pretty much set their own price if they're heavy enough, if they have enough clout in the market. Over the past 7 days, what are the greatest percent gainers? We can see audio, comp, EOS, Bitcoin Cash, Ape. And what's below that? SHIB, XTZ, XRP, Litecoin. XRP is really interesting. I was watching Jeremy Hogan's work, and he's a terrific guy. He's a very funny guy as well. He was basically discussing what XRP's legal status is. At the moment, it looks really, really good for XRP. Do you know what that actually means? Please let me know in the comments. It's a very, very important thing to understand what the SEC case against XRP is. A lot of people get polarized on cryptos. Professionals are not polarized on any crypto. They're in and out of crypto all the time. They just look at percentage, not price, and they try to understand what is moving the most so that they can get their X%. What we see here is Bitcoin just hovering along its upward level of support. And this is really constructive stuff. Even with such thin trading, we're seeing and witnessing that price is basically just normalizing around that support level. That is really, really good stuff. Does it mean it won't come down? Look at this. Look at these long tail spikes. This is an inherent part of the crypto market. We talk about this a lot in the masterclass. These spikes, these tails, are really, really important to understand. Another critical factor to understand how to get into the smart money mindset is to understand Bitcoin's gravity, this blue line. What we see here is the fingerprint of Bitcoin, the blue line, over Ethereum. We can see Ethereum is stronger than Bitcoin at the moment, and this has traditionally been the case anyway. And when we look at Binance Coin is following Bitcoin's gravity. When we see XRP, it's doing the same, but it's starting to shoot up. And that's because people are seeing the potential of a favorable outcome for the XRP case. Now, what does this actually mean? When you have your discussion in the comments section about this, and this is really, really important to understand, and we have a lot of knowledgeable people who've been through the CryptoTradingKS Masterclass, ambassadors. Those people understand how the crypto market works, and they're always there to help people as well. It's like a private community, but it's just on YouTube. How fantastic. The concept is here. If XRP wins against the SEC, what do you think will happen to the entire crypto market? Please share your thoughts on that. It's a really, really important topic to understand. And if you say right now, oh, it doesn't mean anything, maybe just have a look at the comments. Cardano, ADA, we can see it's just consolidating, as is Solana. Luna is also consolidating, but had a little bit of weakness here. One thing to bear in mind, when you want to actually pick a specific project to go into, understand your upside and your downside risk. It's really important. Price moves in waves all the time. For example, if you bought ADA down around this 80-cent mark, you probably would have been pretty happy because you bought near the bottom. Now, one thing that retail does all the time is it tries to buy the exact bottom. Forget about bottoms, forget about tops. You're not interested. When you actually get into trading per se, you're interested in how price can move up to different levels, and that is money in the bank. And you don't have to make the 1000x, the 100x, the 5x that other people are talking about. If you were to just make on average, and you won't be able to do this every week, but if you could make 10% per week on average, which means some weeks you make less, some weeks you make more. If you could do that and just grow and compound that return, over a year you would grow $1,000 into over 110,000. Just bear this in mind. 10% is a pretty magical number, but you must have knowledge and rules to do this. It won't just come to you. Just because you put money into a project doesn't mean anything. And quite likely, smart money on the other side of that trade will be teaching you a lesson if you're in the retail mindset. And that lesson is to actually know what you're doing, do your own research, learn as much as you can. And this is why the real wealth mindset is so important. If you get angry, if you want to pay out on other people, you'll just get stuck in the loop. You don't want to go anywhere near this loop. This loop is always caused by a non-professional or emotional mindset. If you're using your emotions to place your investments or place your trades, please just rethink everything. Emotions will kill your portfolio. It's just a question of when. And one thing to very much bear in mind, do not compare yourself to other people. Do not care about what other people say. For example, if you've got a close friend and that close friend says, I'm in crypto and I'm making all this money, just ignore them. It's not important. How are they making their money? Are they professional in terms of their mindset? Everybody's at different parts in the journey. And you're unique. A lot of times people can look at other people's success and get really, really angry. When it comes to smart money thinking, we don't get angry. Why? Because we're completely unique. We're at a different path, a different part of the cycle to other people. We can look at somebody else's Lamborghini and say, good on you, well done, fantastic, you're showing it off, you're very loud. That must mean that you want to show off your riches. And wealth is a very different thing. Wealth is really quiet. Wealthy people, you'd never really know how rich they are because there's a huge difference between riches and wealth. Please let me know in the comments what you see as the difference. If you ever find yourself getting into competition or comparison, if you're looking to the markets for excitement or to get rich quick, please don't go there. You'll lose your money. In fact, what smart money does whenever they place a trade, and we know all investors become traders anytime they buy or sell, what they do is they say, okay, I'm expecting this to go up, for example, but I know what I will do if it goes down or if it just goes flat, because they're making in advance probabilistic choices. Retail only expects up, and when it goes down, they get really, really worried because they don't know how to deal with this leg. And that's a big problem, but it can be overcome with knowledge. Returning to these top cryptos, and you can just realistically confine yourself to these. If you're looking at that 10% concept, and it's an idea, it's a concept, it doesn't put a straight jacket on you and say you must do 10% per week no matter what. It's not like that. Many times you'll do 50%, and sometimes you'll do even more. It's not important what you do. What's important is the process. Just scale in, start small with your trading. Get an understanding of what you're doing. We can see AVAX is coming down to a support line. Out of these 8, please let me know what particular crypto you think out of these 8 has the most dynamic support underneath it. That means that it's the most supported. And potentially say why you think that as well. But if, for example, you're not quite sure, you could just say, if you like data, you could just say ADA, and you can leave it at that. Looking through the community favorites, we can see that these particular alts are just moving with Bitcoin's gravity. Bitcoin is consolidating. What's Gala doing? Consolidating. What's Phantom doing? Consolidating. What's Icon doing? Consolidating. What's Veracity doing? Consolidating. What's ZIL doing? Consolidating. Rune is looking a little bit different. You can see this big ping up and a actual fall in here. It's going out of alignment with Bitcoin's gravity. It's very interesting. Keep your eye on Rune. There could be something brewing in there. This is why we enhance our pattern recognition every day. We want to understand and get a look at the cryptos when they're about to turn around. We love cryptos. It's just like getting into ADA at 80 cents. And let's have a look. What is IOTA doing? It's following Bitcoin's gravity. It's just consolidating at the moment. Have a look at DOT. Oh, this is really, really interesting. It's showing relative power. This is really good stuff. And always do your own research. I'm not giving you any tips or anything like that. It's important that when it comes for you to pull the trigger, you know what you're doing and you take your own advice. But what we see here is relative power coming through DOT. Turning to our question yesterday, we looked through these 8: Sand, Decentraland, Engine, Chiliz, SLP, Ape, Gala, and ILV. And the question was, if you could only pick one, which one would you pick? And in the comments section, people picked just about every single one. And this is really interesting. When it comes to actually picking any particular crypto, there are no wrong decisions. Literally, there are no wrong decisions. Someone can't say, you're certainly wrong, because in crypto we have exponential price action. Things can repair very, very quickly, and they can drop off very quickly as well. The majority of the votes went into Sand, Gala, and Engine. All good particular price points, but maybe I see just a little bit differently. I can see that Engine is not too bad, but the one I'm really interested in is actually Chili's. Chili's has this very strong upward support, kind of like this, but you can note that Engine is going up and down. Engine could be more volatile and could reach a 10% target or more easily. But there's another thing I want to show you. You can see how SLP has actually sold off and it's bottoming out. This is actually really, really interesting stuff. There's about a 60% increase from that price to around here, whereas the other ones are about 30%. It's very interesting to keep these things in mind. There's a lot of overlay on your data that you want to do when you actually pick a particular project to trade. Now, there's a difference between trading and investing. Investing, you want to hodl on. You might be doing this. You might be wanting to buy at the best price. But when we're looking for short-term investments to actually be turned over or trades, that can be really, really good because you can take a small amount and you can do really well with it. One thing that you will want to keep in mind is how far a particular crypto could go. But the difference here, SLP is actually bottoming out at the moment. I put some trades on SLP. This is like a black run in skiing or a triple diamond. It's a little bit risky, but I'm prepared for the risk because I put plenty of orders below it as well. But when you go to a lower risk, Chili's is very good. Engine could show up in terms of some spikes because we're getting a lot of spiky behavior in here. If that is the case, you want to put your sell levels in when you get a buy order filled. And I know that SLP and of Axie Infinity, but Axie Infinity is also following Bitcoin's fingerprint. This is a bit of a hidden secret in the crypto market. If you know what Bitcoin is doing, if Bitcoin is starting to base and starting to turn around and starting to push itself upwards, as I believe it will, we may get a little bit of short-term turbulence, but that is where I believe Bitcoin is going for so many different reasons. And I do believe we're going to see higher highs than what we've seen in the past two peaks. This means I believe the price is going to exceed the previous high that was around the $68,000 level, and Bitcoin has got an incredible future ahead of it as well. A few people have been asking me to update the KS model. I'm very happy to do that. I actually mentioned I said around 2 months in 3 different episodes. I believe it was around episode 433 that Bitcoin, or the KS model, was a victim of Russia's aggression against the Ukraine. This is just something to understand when it comes to understanding the markets themselves. When you understand the markets, you realize everything is interrelated. It could be good to get another poll on these particular 8. When I shared what I shared, did that actually change your perspective on any of these 8? Please let me know in the comments. It's always great to talk about these things. If you find yourself getting caught up in emotion, please remember the professionals have mastery over their emotional state. They don't go through hope, optimism, thrill, euphoria, anxiety, denial, panic, capitulation. We simply don't do that. We know to buy on red and to sell on green, but we have the knowledge to know when we actually do that. We have so many rules that govern our behavior inside the market as well. We're not trying to get rich quick. We're trying to actually get wealthy. And there's a very, very big difference between them. We don't seek competition. We ignore comparison. We know gambling, if you win, you lose, like the lottery winners. We think nothing of luck. We do hard work. We put the effort in because we know if we don't work for it, we don't earn it. If we don't earn it, we don't keep it. One thing, to break out of zone 1 and zone 2, learning is the critical thing, but there can be no learning without forgiveness. A lot of people see themselves in retail and say, well, Ken, don't tell me I'm in retail. I don't want to be in retail. I'm angry at you. They get angry. But the concept is that actually it's okay because all of us have been through it. I went through this myself decades ago, and everybody does as well. Anybody who says they haven't been through this is just lying to you. That's why I developed KS Zone Analysis, to help people to understand we must move out of certainty and terror into probability and knowledge. The only way to do that is to learn. The only way to learn is to forgive. When you know better, you do better. So don't worry about what happened in the past. Life resets every day. I hope you found the content useful. Please consider sharing and liking this video and also subscribing to the channel. We'd love to have you as part of our globally extended KS family. Thank you very much to our moderators for keeping our community safe from scammers, and to the CTKS ambassadors for mentoring masterclass students. And of course, a very big thank you to you for watching and for being part of our global KS family. If you would like daily updates on price movements in the crypto market, please subscribe to YouTube. I've left helpful links in the description of this video, such as the tax software I use, and links to the CryptoTradingKS Masterclass. You can just come across to show more, and you can see all the masterclass links here. And you can seek out an ambassador to get 80% off. Please remember, crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. Stay safe out there, my friends. Take care and see you next time. Bye for now.